All right. Thank you very much, Anurag, for bringing us a snapshot of how the IPO segment has been, how it has fared over the past few months, and especially in the month of March, wherein some softness was seen. And to decode all of these moves and what's the way forward, we're now joined by Mohit Gulati, the CIO and managing partner at ITI Growth Opportunities Fund. Thank you very much, Mr. Gulati, for joining us here on ET Now and taking the time out.
It's been a wild week for
All
all of
right,
us.
then,
So
Mr. Gulati, the first question then is that yes, absolutely. It's been a wild week, but there is some breather that has been brought about by that 90-day pause in tariffs, and there might be some cheer around. But Citi says that the US cannot avert a slowdown in growth and inflation, and that's the view that's been held by JP Morgan as well. And March volumes, while you were seeing my colleague talk about that, they have been low. What does this really mean for the IPO market, which has been rather robust all of 2024?
it's not just 2024, right? If you look at the last 2, 3 years, it's been an incredible IPO market for a host of startups. The problem is that, if you look at the issue price versus current market price, there is, barring maybe I think 2 or 3 names that come to my mind, everyone's trading in the red. So clearly there is a valuation mismatch between the way the private world is valuing companies and the way the public world looks at it. The path to profitabilities can be a lot longer than one would expect it to be. So I think we are in a phase where everyone's sort of getting a wake-up call, realizing that, okay, maybe valuations matrices that we used are not really the optimal ones. The public world looks at it differently. I think, it's going to be a tough year for IPOs, particularly for the ones which are trying to raise money at the funds that they've raised in the past. You will see a little bit of correction, say the likes of the Ather Energy. You can't have a Ola Electric trade at, say, 25, 30,000 crore market cap and expect Ather to list at 20,000 crores. That's not going to happen. Both will, I think, face issues, right? A degrowing volume growth, degrowing EBITDA margins. So you will have to see sanity come back. I think good issues, businesses which are India focused, not at all affected by what's happening in the world in terms of tariff wars, will still find good footing. I'm very bullish on PhonePe's IPO. I think it's going to be an interesting one to see. Uh, Lenskart should be again an interesting one, very domestic, India-centric business, and at least the opportunity sounds that way. So I think you will good issues will find their place. Some of the overvalued ones may not really find the best suitors out there.
All right. So, Mohit, the big, takeaway from what you've said is that companies will have to assess their valuation correctly, and of course, need to have a good business model. But how do you expect then companies to recalibrate their strategies and plans to go public?
I think it's a tough time for entrepreneurs because I think there's a lot of pressure from the larger private equity participants. One of my own personal portfolio companies, Ecom Express, was forced into a slump sale last week. And it is, it's a little saddening because what's happening is PEs who've sort of held on to a stock for 7, 8 years, they have exit pressures on hand. So they need that IPO route to get out of businesses because they cannot continue to fund losses anymore. So I think, entrepreneurs will have to be really smart to navigate these times. Definitely cut down monthly burns or yearly burns so that you can sort of wade through these times. My sense is your timeline on hitting the market could be a lot more elongated today versus what it was, say, in the last year. So overall recalibration will happen across the board, right? Investors' expectations, valuation expectations, entrepreneurs will have to hold on longer to unlock value in their own equity. Everyone will have to learn the game of patience. Gone are the days where you could just pump and dump things. I don't think that's going to happen anytime soon.
Right. Right. So you're saying that there's not going to be any pump and dump anytime soon, and valuations will have to be realistic. So while some of these companies may go ahead with their plans, how are these listings going to be different from what we saw, for example, a couple of months back with Swiggy and Ola? How are these listings going to be different from those companies?
No, I think we speak to a host of fund managers, both on the listed and the unlisted side, right? I think the listed fund managers now understand listed companies a lot better than what they did, say, 4 years ago. So when Swiggy listed, there was a lot of promise, but then you also could see that there's a lot of competition coming in the quick commerce space. Both Zomato and Swiggy have actually taken a hit, have taken a beating in the last couple of months. I think people are getting a lot sharper in understanding new age businesses. And essentially, I think when it comes to marrying valuations, when you take learnings from old age businesses, marry them to new age businesses, target prices are sort of recalibrated. You will see a lot smarter decisions being made in the IPOs that get subscribed. I mean, we know of funds in Hong Kong who were participating in any and all QIPs or IPOs. They've actually just got completely wiped off in the last fall of last 2.5 3 months, because you're stuck with inventory of IPO load which you're unable to exit out. Margin calls have been triggered. I know at least two large names which have completely wiped off in the last 3 months. So I think gone are those days where you could sort of do a pump and dump anymore.
Right. And Mohit, which segments do you think will have the maximum impact? Of course, it's dependent on how a company's financials really look like and how do they do business. But which sectors do you think will have the maximum impact, given that some of these companies, which I named earlier on, while I was introducing this segment, are sectors where there is a lot of cash burn. However, there is a lot of interest in these sectors too, like quick commerce.
Also, I think a Zepto is an interesting one. That should continue to sort of be able to attract capital. There is, of course, competitive pressure, but they've been really swift and agile in product innovation. A boat, on the other hand, I mean, I don't see any innovation in that company in the last 2.5 3 years. I mean, yes, truly wireless headphones were great 3 years ago, and yes, you were the pioneers in bringing it low cost. But today, I have noise which is giving me Bose equivalent headphones, or Bose is an investor in noise, and I can get those same headphones for 4 5,000 rupees. I don't see the value proposition there. I think people have to really step up and keep reinventing themselves. Only then you stay relevant. Else it's very, very difficult. I mean, for the likes of Aether, we mentioned you mentioned Aether. I think Aether is a great product, but they still have a very niche, very for the classes kind of product. Their mass product has still not hit the roads. It's still not got consumer appreciation and love. So once they start getting that, then maybe you'll see valuations upholding that. But I think it's an interesting time in general for all startups.
Just a quick question I want to get from you on, globally, founders have actually flirted with the idea of not being in a rush to be a publicly listed company, right? You have Stripe, for instance. Is that indicative of a permanent shift, given that growth is far less certain and valuations are not as high? Do you really anticipate a time wherein that could be seen here in India as well? Because globally, people are looking at that alternative as well, and they are discussing about that opinion.
For more developed markets, right, where there is a lot of capital available for you to stay unlisted, that is an option for sure. I think the unfortunate part is in a market like India, there isn't enough depth that we have. So can a business which is say doing 4 5,000 crores in revenue continue to get money in the private world? Or will there be backers who are willing to sort of stay with the business for 10, 12, 15 years? The answer is no, right? I mean, and we're very, very uh, if you look at how our financial markets are, right, we're very heavy on the listed side. On the unlisted side, the allocation numbers are significantly lower. We look at domestic alternate investment funds in totality, right? We're like less than 250 billion in practice, which are the percentage of GDP is significantly lower than what it is, say, in the US or even in Europe for that matter. So I don't. While it's a great thought, theoretically it makes sense. In practice, I just don't think it's possible, at least for a market like India.
All right. So India is not something that where this trend perhaps will be seen due to lack of capital. Mohit, just a final couple of questions before we let you go. Just a quick word on what do you anticipate then for half two of this year?
You know, I think that's a very tough question, right? Because every morning we wake up and we see new tweets, and the day changes, the course of the week changes. So I think it's going to be a tough one to sort of predict. But my sense is, India is going to. I won't say India is going to be unscratched, but India is going to be a way, way better place than most other economies I can think about. We are better off than Vietnam. We're definitely better off than China. this should be an interesting year. I think a lot of FIs who fled India will find their way back into India in the latter half of this year. There is, I mean, the whole China plus one, we are the only beneficiaries there in a large majority, right?
Right. So India will be a beneficiary. You say that once again on the China plus one story, given the kind of trade war that we have seen between the United States and China, while every other country has gotten a reprieve, we'll have to see how that story goes. But one final question, Mohit, and that is on Union Commerce Minister Piyush Goyal's comments, wherein he stated that we should perhaps move on from, what he said, ice cream startups and chocolate startups and look more towards innovating in deep tech space, in the emerging technology space, and some of these areas where world leaders and countries are competing. What do you make of his comments, and would you support what he said?
For those who believe in diplomacy, the answer would be, to find a middle ground and be diplomatic around it. I'll just call a spade, right? I think it's very unfortunate, and I've written a whole long post on it. I think it's very unfortunate that it's coming from a person as astute as him. The fact of the matter is, I mean, we've all tried investing in deep tech. We've all tried investing across various sunrise sectors. Um, just as a country, we don't have the infrastructure, we don't have the entire ecosystem. I mean, government can talk about as much as they want with regards to, you should do this and you should do that. I mean, my question is, what are you doing for us, right? The 10,000 crores that we talk about Startup India mission, the people who are the gatekeepers for that, why don't you hold them accountable? As taxpayers, all of you should have a right to ask questions on where did that 10,000 crores go? In a fund of fund structure, which were the funds that money went to? What was the performance of those funds? What were the clauses that you put on those fund managers? I mean, for the regulated environments that we live in, we spend half our time managing regulations with SEBI, RBI compliances, and with running behind FOFs who basically treat us like shit. So it's easy to sort of be on the side and make these comments. It's very tough to build businesses. Entrepreneurship isn't an easy job, and anyone who's done it ever will say it firsthand. So if I mean, kudos to Zepto, kudos to everyone. You've created the startup ecosystem's created more jobs for this country in the last decade than any other PSU, any other corporate has done. So if that is not good enough for you, then I don't know what is.
And what we are given to understand, Mohit, is also that the government, which is, which is action this 10,000 crore fund of funds, majority of its sources are telling us will be activated towards deep tech, towards emerging technologies, robotics, AI, etc. Well, we'll leave this conversation on that note, but thank you very much for sharing your thoughts and your perspectives on where the IPO market is headed. And seems like it's not going to be such a good year, especially for companies that do not have great financials and that do not have a very good eye on valuations that they are expecting. Well, thank you once again, Mohit, for joining us
Thank you,
here on
Sumita.